Okay. So you're welcome to yet another class. In our last class, somebody, I wanted to like point that out. Somebody gave an analysis that played out. She may have not remembered, but I recalled. Somebody gave an analysis that played out, and literally that's the start of how you start to win trades. So I think it was a lady's voice I heard, and she was like, on the monthly time frame, that the price has taken out on GBP JPY. Yeah, price has taken out the previous month's high, which was around here. Took out the previous month's high. So price took out the previous month's high here and gave a CISD. And I told her that she could be correct, but I am not currently trading GBP just because the price action was looking crazy. So, but the trade ended up playing fine. Took it out. I've forgotten what session is this. Let me check if it was a key time as well. Sorry, was not the indicator I was intending to put on. Okay, this indicator doesn't show at 4 hours. I put mine to not show at 4 hours. Okay, so this was like past the key time. This was like 11 o'clock. Yeah, but that is still a valid, CISD, as you can see on the H4. And guess where price reacted from and sold to the range low. And this is actually the class we're going to learn today, range trading. Price reacted from the CISD and sold to the range low. Really. So that brings us to today's topic, range trading. So the thing about range trading is, from this particular post, you must have already understood what I meant. Range trading just simply has to do with understanding drawn liquidity. It is the entirety of drawn liquidity. In fact, I would have not taught this class, but I was like, let me just come and, say a little thing and probably just go. And I'll leave you with a major assignment to, oh my goodness, what am I seeing here? Leave you with a major assignment to find good ranges, you know, you know. But I was like, let me just come and do it myself so that I get the basic understanding. Let me get my notes. It's gonna be quite a little bit lengthy class, but hopefully it's not. All right, so when we talked about key levels, we talked about when we talked about key levels, we talked about the correlation of key levels, where we said for a H1 key level, you look for entry on M15. From a D1 key level, you look for entry on H4. H4, you look for M15. I think you remember that. Okay. So, all right. This is a lot. This is a lot. A lot. Okay. Okay. So, and then we talked about key time, right? We talked about key time. For New York session, 3 o'clock to 4:30 p.m. WAT. For London session, 8 o'clock to 9:30 WAT, which is subject to change, okay? Subject to change via what? Subject to change via DST. Then we talked about Asian, 1 o'clock to 3 o'clock. Okay. I'm going to be teaching you a very important candle, something nobody taught me, but I discovered myself as well, that could also shorten the journey on ranges for you. That could shorten the journey on ranges for you. And take it or leave it, they work. So there's a cheat code for you to see a candlestick on the weekly or monthly or daily, and that's a range. Hope you know that. things you will not hear anywhere else. So trying to arrange how I'm going to put all these things, because God knows I don't even have energy. I'll just send you guys my notes to read. Well, okay, let's start from somewhere. So the primary thing in understanding range trading is understanding draw and liquidity, right? We said that and also my network may not be that strong, but we'll manage. We said that each part of a candle, especially the major candlesticks, even though I like to use the H42 to confirm. And somebody also asked the last time, why do I use the H4 to confirm my trades? And I was like, the H42 is the time frame. Help me mute that person. What's his name? Marvelous. Help me find that person and mute him.
Okay, sir, on it, sir.
Okay. So we said the H4 time frame is like a decisional time frame. The H4 time frame can prevent a drawn liquidity from manifesting. The H4 time frame can also print something like this. At the end of a range, it prints a CISD and it tells the H4 time frame can do a whole lot of things. So if thank you. So the H4 time frame, let's say we're on a sell and the candle breaks inside of that particular chart. Something like this. Let's say we're on a sell and the candle breaks inside there, closes inside with a full body. That could signal that the market is not ready to sell. Hope you know that. But when you're on a sell and the market comes close to your entry just like this and rejects from there, closing below, you know that this is a valid. In fact, if you see this thing, something like this reacting from a supply, just know that supply has weight and the supply is pushing price down. So, but when you see price start closing with the body inside of a supply, it's very, very, very potentially a trap. So that's why I use the H4 as well to know when to close my trades or when to leave it, okay? So when we talk about range trading, we talk about drawn liquidity and how the market actually attacks both sides of the liquidity and how we actually, yes, how the market attacks both sides of the liquidity. Knowing that this is a bullish candle and a bullish candle has a high and has a low. Each part of it is liquidity. Each of it is liquidity. And I told you guys in the GOL class, I just pitched it in that when the market takes out the high and closes inside with a bearish candle, what happens? We now have to draw liquidity. The low that this particular candle created and this final low, right? So the market would drop, take out this low, and take out this low. Okay, that was the progression of the whole thing. But we're going to see range trading in a different light altogether. So, but just know that everything drawn liquidity is a type of range. The drawn liquidity, this model, I think they call this, most CRT traders call it model 1. I'll be the most popular model 3, I'll be 3 candle model, where the market sweeps its high, closes out with a bearish candle, and what happens? The next candle attacks this low, right? But they never talk about other models or other drawn liquidities because it can come in several ways. Okay. Now, I don't know if you're going to have time to see all of them in action, but a few of them we'll talk about today. You will help me draw it down and go and do your little research. So this is model 1. Just know that this is the easiest. You can recognize this one at least by now. It is the easiest, right? It is the easiest. So let's look at the second model or the second type. Now the second type is like this, where we have a single candle. Okay, and then we have price take out the low of that single candle and close inside with a bullish. Remember, this is a bearish candle. Price took it out and closed with a bullish candle. What happens next? We expect that the next market what opens here, comes into this range. That's why I always put my entry here. But another block is going to be there. But opens, drops into this place, and goes to what finally close above this high. So it's going to look like this. It's going to look like this. Market opens and closes above this high, right? Now, what's going to happen is that the market has now taken out this drawn liquidity and has closed above. And when this happens, you know what it's called? It's called also a CISD. The market has shifts and the market is going to finally take out this particular high. So when this happens, this is also another, this is the second model, the second type. The market will open, come into this level because it's a hidden block. This is where your knowledge of hidden block is very important. From here to here is the hidden block. The market will come into this hidden block. You can also combine it with key time. This is why key time is literally just a universal entry. If you have a key level and you don't want to set entries on the key level, waiting for the price to get into that key level and give you a key time CISD is also one of the best approach. So the market will open, come into this hidden block, give a key level confirmation and move to take out this high. This is the second type. Okay, this is the second type. It can happen on any time frame, but I mostly trust it on huge time frames. Okay, now this is the second type. Now the next type is this one, where we have a very long candle. A very long candle. And this one too can also be one candle. Hope you know that. Hold on. This can be one candle. That's the next candle opens, goes to take out the high immediately. It can be one candle. The wick comes into here. This one takes this, right? Can be one candle. Then the next one I want to talk about is the one that will take a lot of candles, but you need to understand something. When the market takes out this range and closes inside, we have what's a protected low here. Now it's going to take, so I don't want to start drawing candles. It's going to take so many candles. They can decide to be ranging and ranging and ranging inside here, but they would never take out this low. They would never take out this low. Okay. It can decide to be ranging and ranging and ranging, and then they finally start to pick up. The end target is what? The final high. That is the end target. So this is the type 3. And I think these three are literally enough. All right. These three are literally enough. So now let us now look at the last one, drawing them down. I'll look at the last one. The last one will need your understanding or your knowledge, and that's the one I'm going to reference today. Others, you go and find them on the chart to do your research. The last one I'm going to reference is the spinning top. Please and please and please, whenever you see this type of candlestick on the daily, on the H4, whatever it is you want to see it. Once you see this type of candle, you know what a spinning top is now. Wick, like long wicks on both ends with like a very short body, some sort, right? When you see this type of candles on any time frame at all, understand that this is automatically a range. Automatically a range. And you know what that means? It means that price will chase one side first. And when price chases that side, pay attention to what it's going to do. If it gives you a chain instead of delivery, that is the entry. I know where price is going to go to next, the low. So you can find it on any time frame. I think the one on Euro USD, I saw one on Euro USD on H4 the other day yesterday, and it played out fine. So all you need to do is you need to pay attention to where price gets to first. If price gets to the high first, we are selling. If price gets to the low first, we are buying. This particular one is very important. Now, this one, draw it down. If you're not going to draw any other one down, this one, draw it down. Draw it down. Oh. Now, let me now tell you also how you can also, how the next candle can give you a clue as to where price is going to chase out first. Now, let's say we close bearish, okay? Let's say we close bearish, a bearish spinning top, okay? And we know that a bearish spinning top, this is the primary drawn liquidity, right? This we're going to call it P, right? And then this is the secondary drawn liquidity. Some persons who have not been coming to class thinks it's physics we are talking about. EXY. Okay, so this is secondary drawn liquidity at the high. Now, this has not been touched. This is our spinning top. It has not been touched, okay? Now, sometimes the next candle can give, if this is on the monthly, the next weekly candle can give you a clue as to where price wants to chase first. A clue, not saying it is definite. If this is monthly, a weekly candle can give you the clue. If this is daily, the next daily candle can even give you the clue as to where price wants to chase first, right? Now, so let's say the next price now does this inside bar still, right? but this particular candle is bearish. Or let's say this particular candle is bullish. Do you know that because this candle is bullish, price will chase this high first, take it out and do what? Automatically reverse down. So you can also use the color of the next candle to know where price is going to take out first. That's in case, because sometimes it doesn't show the two candles. In case there are opportunities where you see two candles, let's say this bearish, this bullish. This bullish one confirms that price is going to take out the high first before the low. Okay, but those are both ends of a spinning top are liquidity, potential liquidity. But I'm not saying when you say spinning top, you rush and start entering at the high. No, wait for your confirmations first before you jump in. And that's really the one I'm going to be talking about. And our market reviews, you're going to see a lot of them because this is the basis of the analysis. This is one of the basis of the analysis, finding a range and trading it accordingly, and also combining key time and other things. Really, we are drawing to the end of our class, so slowly. But anyways, interesting times. Now, this is what we are seeing happening on. Let's go to the monthly so you see it clear. Can you see it? Can you see it? This is the spinning top. Can you see small body with like wicks on both ends? This is spinning top. It is liquidity.
Yeah.
It is liquidity. Axis comment too. It is liquidity. And you can see what price did. Let us see if the weekly give us a clue as to where price will chase first. Where price will chase first. This was the low. Okay, the weekly didn't even give us a clue. The weekly just went straight into it. The weekly was the candle that went straight into it. It just basically took out the high and came to take out the low, right? Took out the high and came to take out the low. That's range trading in action. So, but you can't trade this, and all you need to do is you need to wait for price to give you a confirmation, and boom, you sell. Boom, 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 you sell. That was over 5 hours though. Now, let's look at this one as well. Now, see this one. See this one. This is monthly. Okay, so see what the monthly is doing. This one is also very tricky. Now, see what the monthly is doing. Can you see the same thing spinning top? But do you notice something? This high has not been taken, okay? That's why you can even see the line before this class started. I already drew a line there. Price may be intending to go back up to take it out. So hope you know that. You need to know price is maybe intending to take it out. Now you can see because this one is bearish, where the price chased first, price chased the low first, and they went for the high. Because JPY is bullish, the candle was bullish, price chased towards the high first before it came to take the low, right? So Euro JPY price took out the low first. Now may now be going to take out the high, but still you still now need to go and look for if there's a change in state of delivery, right? You still need to look and check if there's a change in state of delivery. Although I think it was SMT that caused this. The market tried, or Euro USD that caused it. The market tried to go up, but the strength was too weak and it came down first. So it may most likely start going up to take out the high. And look at where it just came into. What is this? A weekly order block. Again, a weekly order block. So any confirmation from there to the upside is literally a banger. So these are ranges work. Then let me show you a few more. Trying to see if I would see a CISD. Trying to see if I would see a CISD. Already the daily is trying to close. H4 is trying to close like this. Normally I would just put an entry here and buy and tweezer. But I would have to confirm. Okay, wow. Wow. Interesting. Anyways, now let's take a look at Euro USD. Sorry, GBP USD. Right? GBP USD. Now, can you see the candle again? Can you see the candle again? The spinning top. And I told you what both ends are what liquidity. Now, so what price did the next candle did what closed inside, but it's bullish. And what did we do next? We took out the high, and then price came for the low. And I've shown you guys how I got into this one with like a lower time frame entry as I've taught you. Right? Lower time frame entry as I've taught you. Now, this is just the first part of the class, so we've not gotten into other things yet. I'm just trying to show you, simulate a few ranges for you before we now get into some key important details. Right? Okay, so this is another one. Just be paying close attention to the spinning top. That's all. Look at it. A small body with long wick. And the market took out the low and closed an opposing candle. Can you see it? And then boom, we took out the high. We took out the high. Another thing like this too is also a range. When you see something like this, just know that price is most likely going to take out both ends. Either it takes out both ends and close back inside, or it takes out both ends and change the state of delivery. Is a change state of delivery, took out the low and closed as a high. When you see this, don't even think the price is going to come back at all, especially when the next candle has just broken this high. Secrets, 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 secrets. Hope you're taking notes. When you see this, let's look for more. Let's look for this one is your normal CISD that you know now. This is your normal CISD. This is your normal range. Close inside with bearish and then boom, drop. Your normal range. I'm seeing a lot more here, though. Oh, let me just let it be. There's another one here. Met the target and draw back inside. Once the target has been met, any other thing is doing afterwards is none of our business. Took the low close with the bullish, met the target, and closed back inside. If it had broken structure, it would have meant a CISD and the market will start going up. Up, 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 up. See it here again. This is model, three candle model. Three candle model. So this is on type 3. A long candle. The most important thing, like I've told you, is the second candle that closes inside with what's the opposing color. You can see, and then it doesn't matter how long price takes before it gets to the target. It doesn't matter. What we know is that this low is protected. Price will not sweep below that low. Price will not sweep below that low. Even if it likes, let it come close. The same thing that price did here. Came very, very close, but it didn't still sweep the low. Here as well. Came very close, but it didn't sweep it. And please make sure you're taking everything into context, though. It's not when you see a range, you just rush and go and start selling. Now, it just gives you the bias. It just gives you the bias of what to do. Don't just see a range and then just jump into it. You'll get burnt. You would get burnt. So that's enough example. I think I don't want my trade on Euro USD to obstruct your class. And I'm trying not to play it. So let me add on that Euro USD.
I
What is that
knew
biggest
it.
goat?
Damn.
What the fuck is that?
So I will need the course again because I got this one again. So I'm
Oh,
outside now.
oh, I see.
I will do the
I see
same
you
sir.
that made that animal noise. Are you using the co-host? Have you gotten the co-host? Marvelous. That boy is, are you sure he's okay?
I have gotten it now. I will do it in.
All right. FTX, I be FXCM has like by far the worst chat. So sorry. Sorry. If you start to see lots of gaps. Trying to look for one on Euro USD. That was super clear. Super clear. All these things I've explained to you. In fact, just know that range trading has to do with drawn liquidity. Drawn liquidity is the backbone of every single thing. Literally, every single thing. Drawn liquidity is the backbone because telling you range, most persons are already like, is it not drawn liquidity? Price took out one side, close to the opposite, and now it's going for the other side. Literally, it's just it. So people just try to complicate it by giving it names. It is just it. But trading ranges are, and then let me show you that GPUSD for perspective on how it looks like on the lower time frame and how I was able to get an entry. So when you see a spinning top candle, please take notes. Take notes. Even if you start to see it from today, watch how price behaves. Everything actually adds up to study. Nobody taught me this one. I just basically found out. And if I show you a picture of my book, you're going to see where I drew it down. I drew what a spinning top is down. This is how you make observation, and these observations become reality. Saw it spinning top. I saw it so many times, price taking out both ends. And I told myself, something must truly be on this particular candlestick. So I need to give it more attention. And today, boom, you're hearing it from the horse's mouth. So you can see what happened. This is where the spinning top got fully formed. And then what did the next few candles do? Started going up, took out the high first. We can see the time CISD here on the M30 and price. So these type of entries are not negotiable. Even if your village people are against you, there is nothing literally that can stop this trade from playing out. These type of trades are not negotiable. I know one thing about them. They are not always, they're not always around often, or they don't really come around often. So many of you are wondering what Euro USD, GBP USD did around here. And that was the reason why I stayed away from this pair. But we'll talk about it probably at the end of the class during the question and answer session. So yes, let me look for one more. Which other pair have I traded this on? It's range. Anyways, they're everywhere. And it's not really like it's one thing you can hold on to should in case it happens next time. You'll find it. But when we start market review, I may start to help you. I'll start helping you see them until you have mastered them yourself. Until you have mastered them yourself. Anyways, moving on. Now, we need to now talk about high probability range trading, right? High probability range trading. High probability range trading, monthly range trading. Now, but most importantly, when we talk about range trading, we need to talk about the power of three, especially the type 1, right? The type 1. My network will So especially the type 1, right? The type 1, this particular one, the type 1, this particular one, made the one that's made up of three candles CRT, right? The type 1. Now there are three candles involved in this whole thing. Okay. There are three candles involved. The first one is accumulation. I understand many of you actually say learning trading and then you thought of accumulation as something like this, okay? Many of you see this as what they call accumulation. But you know, accumulation can also be like this. When price is what? Raging towards one side. It can also be accumulation. This is definite as what? Consolidation, not accumulation. So many persons confuse consolidation with accumulation. Accumulation is when they are actually pushing money to one side, accumulating money on one direction. Consolidation is when the market has no definite move, no up, no downside. It's just inside a rectangle. So know the difference today. So the power of three, this the basis of the whole series thing, is made up of what? Three candles: the accumulation candle, the manipulation candle, and the distribution candle. The accumulation candle, price manipulates, closes, price manipulates below it, which is this one, and then closes back, then price distributes. That is what forms the basis of this particular range. Three candles: accumulation, manipulation, and what? Distribution. Now, it is recommended that beginners actually trade this distribution because it is easier. This manipulation can be tricky. Although I've taught you a very easy way to actually catch accumulation, which is timed CISDs, it can be tricky if you're still starting. So what I recommend my students do is don't be in a hurry to catch it at the top. I mean, this is how every one of my students started, the new ones currently. Don't be in a hurry to catch it when it manipulates at the key time, whatever. Allow it to completely form. If you say this, even if you say accumulation, no problem. If it's on the daily, no problem. Allow it. Allow it to completely form. Let it sweep and close inside with an opposing candle. Once it does that, your trade is the next day. Undoubtedly, your trade is the next day. I don't want to know how long it takes price. Your trade is the next day. You're going to buy below the open of the accumulation candle. Remember, this is the open and this is the close of a bullish candle. You're going to buy below the open. So this is why I always use this tweezer. It's not random. The market's open, seek liquidity inside here, and then probably what? Start buying. So take out these targets. So your buy, anything buy. So that's why sometimes I don't like to disturb myself with, oh, where's the most accurate point of interest I need to mark. Now, sometimes I just put the line on that tweezer because it forms a tweezer, bearish and bullish. It forms a tweezer. I just put my entry on that tweezer, put my stop loss below here, and I'm good to go. Right? But you can still find entries inside of that range. So you buy below the open and trade the distribution. So focus on trading the distribution candle. Focus on trading the distribution candle. Focus on trading the distribution candle. Now, there are high probability, that's because I like to talk about high probability a lot. It is now your decision to trade. Oh, do I want to stick to these things technically say the high probability, or do I want to, do my mind? Every day has a function. Every day has a function. Listen, I'll be writing down. Every day has a function. Now, when it comes to trading CFDs, currencies, Monday can form the accumulation candle. Friday can form the accumulation candle. Only these two time frames can form the accumulation candle. Okay? On indices, SPS, NASDAQ, and whatever, Wednesday can form the accumulation candle, and Friday can also form the accumulation candle. So for indices, Friday, and we have Wednesday. And for this one, we have what? Monday, and we have Friday. Accumulation candle, this one. Now, what are the key manipulation days? Only 2 days out of the week are permitted to manipulate. Okay? Only 2 days out of the week are permitted for a correct and high probability range, right? For a correct and high probability range. A correct and high probability range. Only 2 days are allowed to manipulate. Now, the first one is Tuesday is allowed to what? Manipulate Monday, or turtle soup. Let's use the word turtle soup so it's easier because everybody knows what turtle soup is. Turtle soup is just sweep of liquidity. Their manipulation, that manipulation thing is turtle soup. Tuesday is allowed to turtle soup Monday. And then if this happens, there will be no turtle soup on Wednesday. But if Tuesday does not manipulate Monday, or Tuesday goes ahead to create a new range, Wednesday is allowed to manipulate Tuesday. Wednesday is allowed to manipulate Tuesday. So with that, we can inferentially say, or inferentially say that the high of the week, the most probable high of the week happens on Tuesday. The most probable high of the week happens on Tuesday. For a high probability CRT, not like any CRT can happen any day, can happen on a Wednesday, can happen on a Thursday. Don't go and say TECHRITM said now. Just for a high probability scenario, Tuesday is going to form that manipulation. Tuesday, do your research. Tuesday is going to form that manipulation. Okay. Now, Wednesday too can form as well. We saw it on G. Wednesday formed. So, and then the low of the week happens on a Thursday. The low or high of the week happens on a Thursday. So we can link Tuesday with Thursday because if Tuesday creates the high of the week, Thursday will create the low of the week. If Thursday creates the high of the week, it means that what Tuesday already created the low of the week, and vice versa. If Tuesday creates the high of the week, high, means that Thursday is going to what? Create the low of the week, the lowest points. This is why I always advise close your trades on Thursday because most times the market will finish everything it wants to do on Thursday. Thursday will create the low of the week, and then probably Friday is going to start doing some jingleberry. And then if Monday drops and sometimes Tuesday drop, Wednesday will go to what creates the high of the week. Folks start having the Friday rubbish. So these 2 days are also very important as well. So if you've not had the high of the week and you're still expecting a sell, this is a clue. If you've not had the high of the week yet and you're still expecting a sell on that particular pair, it may most likely happen on a Thursday, right? A Thursday. But any of these 2 days, T, W, T, are prime trading days for CFD traders. Tuesday, Wednesday, Thursday are prime trading days for CFD traders. So any of your time CISDs should come from any of these days. Any of your time CISDs should come from any of these days. High probability ones. Low probability ones can happen any other day, fine. But high probability ones should come from any of these days. Okay? That is for the daily scenario. Now for the weekly scenario, because it is possible for the weekly to have a CRT. It's possible for a weekly to have a CRT. Now, the high probability weekly scenario is this. The first week will form the accumulation. Second week will form the manipulation, right? Second week will form the what? Manipulation. Then it is your job to trade the third week. Why is this thing doing like this now? How about? It is your job to what? Trade the third week, right? It is your job to trade the third week, is the distribution week. It is your job to trade the third week, distribution week, right? Or, because two scenarios. So this one is week 1, week 2, week 3. I'm sure you must have seen this on the book I asked you to read. Although I've not read that book, but I just read it. It's preliminary. Just read it. Now, or the first week can actually continue what the last week was doing or past month was doing. Okay. Then the second week will form the accumulation. Your job is not to spot the accumulation anyways. Your job is to, as beginners right now, that you cannot catch the manipulation, focus on catching the what distribution. Now, the second week will form the what accumulation. Now, third week is going to form the what manipulation. And when this happens, the fourth week is going to distribute straight. The fourth week is going to distribute what straight. So, but this one, we can have that even third and fourth week distribute. So hope you know that. As long as here becomes what's protected, we can have that the third and fourth week actually continues the distribution. First, second week, third and fourth week can just distribute whenever they like. But when we have cases like this, most likely fourth week is going to distribute straight towards the second week's other end. These are two high probability scenarios, right? These are two high probability scenarios. So we can say most distribution days happen on Wednesdays, happen on Thursdays as well, right? Happen on Thursdays. Now, allowed days. Allowed days for soup, for weekly soup, is the second or third week. Now, the third week is souping this one, and the second week is souping in this case. So the second or third week in a month, most likely what have the turtle soup. And inside that second or third week, it is going to be a Tuesday that's going to turtle soup. Hope you know that. I'm going to show you a demo, and you go and do the rest by yourself. It's just a tiny demo, and you go and do research, because many of you are not researching. You're basically sleeping on your hands. You're not doing research. I'm going to do a demo, just one or two demos, show you it in action, and you go and do your research yourself. Okay, so I think with that, if Monday creates the low of the week, Wednesday accumulates, most like Thursday will create the high of the week. Okay, I said that already. All right, so I said D1 key level, H1 for profiling, H4 key level, M15 for profiling, M15 key level, M1 for profiling, M1, you don't need it at all. H1 key level, M5 for profiling. And then finally, okay, so I think that would be the end for range trading. Let me now do a demo of what I just thought. And do the rest yourself. So let us look at weekly time frame. Let's look at the weekly time frame of some pairs, some pairs, some pairs, some pairs. Okay, June 8th. Okay. This weekly time frame. Oh God, these people have the worst chart ever. Now, this is also what I mean. So this is one I mean. I don't want to start investigating here, but I'm sure that the low of this week is either going to be on a Tuesday or what's Wednesday. So go and do the investigation yourself. Now, but this is what I mean. Now, this is March, first week of March. This was the last week of April, anyways. Forget that it's showing March. This was the last week of April. Sorry, I say April, February. I'll be the beginning of March, yeah. February, beginning of March, depending on how the month closed. But see now, the first week of March, which ended on the 10th, continue to move from the last week, which is the second scenario. Continue to move from the last week. Now, what can we see? The second week created the range. Can you see the third week, total souping? And what did the fourth week do? Immediately takes out this other end. Can you see that this candle is opposing this one? Can you see that it's opposing this one? But this is the scenario where the fourth one, if we have this one continue the previous month's dealing, this one creates the range. Second week, the third week is going, the last week is going to distribute straight. There is no, let me just take my time and then wait for another week to continue. No, 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 no. So I'm going to do this one, then you do the rest yourself. So we're going to do this one. Let's cut out price because I'm seeing a CRT there. Just investigate where you're seeing CRTs. Go and investigate this one as well. I'm going to do this one for you. Probably look at this one. Then you can investigate the rest yourself. So let's cut out price here. You can call my phone in the moonlight. So this is the second week, third week, last week of July. Okay. I can't tell which day is this, but this is the first week. So you can see the first week is continuing what the first week is continuing what the last week did, right? Although this was a CRT, then this was the high. This was continuing what the CRT, but this one was the second week, July 10th, right? Created a range, but it created a range and it came into a key level, So it swept this liquidity out and came into a key level. Now let's investigate what happens at that high. The high of the week, most likely it's Tuesday. So let's look at the day. So see what's happening. This was Thursday, Friday, Monday. What can you see? Tuesday. Tuesday, okay? Tuesday high of the week. And then this is Wednesday. What can you see? Thursday low of the week. This is where the range ended. Thursday low of the week. Although this is a very huge range, though, I'm just trying to show you because I think the range ended around here. Let me go back to the weekly. The range ended here. The range ended around here. Around here. I'm just trying to show you that it most likely a Tuesday that creates the highest points. Now let's go to the M15 and see if you're going to see time TISD there. This is market mechanics and it doesn't change. So this was 7:30, 7:45, 8 o'clock. 8 o'clock swept. And this is the reference. When price closed below this low, that becomes the CISD. And the market sold from there until Valhalla. Right? From there until Valhalla. I'm sure you could catch so many timed entries from here to still investigate as well. Because one missed entry doesn't kilo day. One missed entry doesn't mean the end of the world. If you don't catch it at the top, you can catch it so many other places. So don't fixate your mind on catching it at the top, because most like I recommended, most persons or at your level of trading, you need to wait for the week to close. When the week has closed, like this below here, then it is your job to find entries for the distribution, because when it closes with an opposing candle to the range, you automatically know that price is going to go to the 100%. So your job is to trade this particular candle. Look for entries and trade this particular candle, right? Look for entries and trade that particular candle. Where is that one I saw? So let's see what happens. April 8th, second week, second week. So look at this one. April 1st week. Can you see that? It created a range. And this range also fed into a key level. So key level is constant in everything you're doing. Don't go and forget it. And then what happened? Can we see that the market swept this low and closed an opposing candle? And what did I tell you? This place automatically becomes protected. Now your job is to look for entries from here, below the open. I don't know, this is forex.com. Hope you guys know that this gap, you will not see this gap, is because this is FXCM. So pardon me, you will not see this rubbish gap on forex.com. Is this FXCM broker that does this rubbish? So your job is, I think this is type 3. Your job is to keep on trading until you reach this target. The target must be met, right? So you can even get entries until you reach it. Now let us see what happens there. Let me see the low of the week where it came in. Let me investigate it. Investigate. Oh, Chimo, Friday, Monday, Tuesday. Can you see it? Monday, Tuesday. These things are not random. They are not random. I don't think they are random. They're not random. Tuesday. And this is also how you can know your high probability range. When the low of the week or the high of the week forms on a Tuesday, leave them. In fact, call TECHRIZ. I will help you trade it if you don't want to trade it. Call TECHRIZ and he'll help you trade it if you're not interested. CISD, continuation. I think some persons who are smart enough would get entries from here. Although this is a very huge entry, I would not do it. I'll look for a very minute entry and get in. But this is a very good move though. Very beautiful move. Let's still check that low on Monday if it had a timed CISD, this circle here. So that low on Tuesday, let's see if it had a timed entry. Let us know. Let us see. What chaos happened under there? What chaos happened under there? Okay, this is 7:15, this is 7:45, this is not a timed CISD. Okay, this was where it later happened. This is still Tuesday, but this happened outside the key window. This is what's 18:30. So I would have not even taken any key timed confirmation entry, but the most important thing is that the Tuesday created the what's the low of the week. Then every other thing is what's peripheral. Every other thing is peripheral. So yes, that is a very good example. Let me show you an instance where Wednesday created the low of the week. So it doesn't look like it's only Tuesday. Well, you're going to see Tuesday happens so much. In the moonlight. Okay, like I'm seeing one here. I think this was one that Wednesday formed the low of the week because Monday could not create a range and Tuesday did. So Wednesday now thought to suit it. Okay. So you can see this is Tuesday. Okay, this is Wednesday. Okay, this is now Thursday. Okay, exactly. Thursday itself, not even Wednesday. So I was wrong. So you see, it is still correct. Wednesday or Thursday, Tuesday or Thursday can create the high or low of the week. So now you can see this is Monday. This is Tuesday. We've not still approached this key level. Okay. This is Tuesday. This is Wednesday. Wednesday approach. Remember, Wednesday can never create the high or low of the week if the next day coming is Thursday. And most likely what will happen, because we've created this high of the week, which is on Monday, right? Wednesday is gonna what? Drop into it, but Thursday will create the low of the week. Thursday will come to claim the low of the week and then start going up, right? This is Friday, and then the next week just happens. Now, this is Monday again, Tuesday, low of the week, Wednesday distribution. Can you see it? Okay. Wednesday distribution. So it's also a timed entry as well. Tuesday creating the Tuesday is the one creating the range. Can you see? Tuesday creating the range. Wednesday total soup Tuesday. And then Thursday created the low of the week. Trade all these things in context. It's not like anywhere you see them spawn out, you go and trade. Monday, Tuesday, Wednesday. All these things have timed CISDs. Oh. It is your job to go and do the investigation, not me. All of them have timed CISDs. Again, Monday, spinning top safe. Monday, Tuesday, low of the week, Wednesday. It is your job to go and do the investigation of the entries. It is your job. It is your job. Tuesday, creating the range. Whenever Tuesday creates the range, Wednesday will most likely to also soup it. Mm-hmm, 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 mm-hmm. Monday range. Tuesday, turtle soup, high of the week. Wednesday, Thursday, low of the week. Okay. Friday, Monday range. Tuesday did not turtle soup, but we dropped. Are still closed. And then Thursday, what? From the high of the week. Tuesday, Friday, Monday. What is this I'm seeing? Zero USD is acting stupid this week. This is the Monday range. Tuesday turtle soup. Oh. Wednesday dropped. Hopefully Thursday comes to complete the move. So, my dear friends, that is what range trading is all about. How many hours have you spent? I mean, how many minutes? Okay, I think that's exactly nearly 1 hour. Okay, so do a lot of research. You don't sleep after this particular class because on the last class, you might find yourself at a wrong spot. So do a lot of research, and come back knowledgeable. So marvelous, do your job.